Interest rates are essentially the cost of borrowing money. Understanding them is key to managing your personal finances effectively. Think of interest as the price tag for using someone else's capital over a specific period of time. When you borrow, you pay interest. When you save in a bank account, the bank pays you interest for using your money. Several factors influence these rates, from national economic policy set by the Federal Reserve to your own personal borrowing history. You will often choose between fixed rates, which stay constant, or variable rates, which fluctuate based on market conditions. Even small changes in interest rates can significantly impact the total cost of a loan over many years. This is the primary tool used to keep the economy moving at a healthy, sustainable pace. Thanks for watching. Understanding interest rates helps you make better financial decisions. Educational content, not financial advice.